Well, in this market, they either love you or they hate you. And despite what looked like a decent report from Salesforce yesterday, the market decided we don't like you right now. And the stock is getting crushed this morning. It was Salesforce's first revenue miss since 2006. So we're going to talk some Salesforce CRM off the hop. We've got some other earnings to break down as well. Some news in Disney. Should be a packed show. We got Joel back. So let's go ahead and get pre-market prep started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All righty, let's go ahead and pop up Benzinga Pro. Go through the indices real quick before we bring Joel and Dennis on this morning. After yesterday, overall red day, we've got the S&P 500 SPY trading down about 0.43%. Go over to the Qs. Oh, too many Qs there. Qs trading down about 0.3%. Dow getting crushed again this morning, down 0.8%. Been weak. Let's go ahead and bring in Joel. Joel, how are we doing today? A little bit of a different setup.
Yeah. On the road today. 2 down openings in a row. The Joel going out of town factor working again today. 2 down 20 plus handle opens. So let's bring in a happy Triple D. We know he's a happy Triple D.
Happier for sure. Still a long ways to go, but it was a big win last night. We're 2-2 in the series, so looked a little bit dicey when we got down 2-0 last night. I was like, oh, this is over. But you know what?
That's when you should be confident.
Did you parlay anything last night, AB?
Nothing that hit, no. But
Nothing
Did
you watch the show yesterday? Did you see what he hit yesterday, Joel? We were talking it.
No. What did he do?
On Tuesday night, I hit a big MLB parlay, but I did. In part of my parlays that didn't hit last night, Dennis, I did have the Oilers and the over in that game. So those two legs.
So that part hit for you.
Yeah. But no, Dennis, you said it yourself that 2-0 is the most dangerous lead in hockey. So once the Oilers went down 2-0, I mean, it happened so quickly. The Stars scored within the first 5 minutes of the game and then scored again. And that's been kind of the opposite of how the Oilers postseason has gone, where usually they go up and then give up the lead. But did the opposite last night where they came back, and then it was just all Oilers for the second part of the game.
Yeah, momentum. Hockey's all momentum. I mean, all sports, we've talked about this before, are momentum driven, but hockey is really momentum driven. Dallas had all the momentum in the first 10 minutes, and then the Oilers scored that one goal, and they had the momentum the rest of the game. Funny how it's just a momentum sport. But yeah, AB bet $100 and won $8,000, Joel.
It was
You're
50.
kidding me.
$50. $50, and he won $8,000 on a parlay. We figured out it was 160 times his money. I was like, holy crap, man. You got to stop trading stocks and just go professional gambling.
How many teams was it?
It was a 6-leg parlay, I think, but a few were underdogs. I had the Angels over the Yankees, and they ended up winning. It was a good bet, but it was lucky. It doesn't usually work out like that, but we talked about that yesterday. Let's get into some earnings. So Salesforce reported after the close yesterday, and when you just look at the numbers, they don't look that bad. Q1 sales came in at $9.13 billion, missed the $9.14 billion, so very slight miss there on sales. EPS came in and actually beat $2.44 versus the $2.38 estimate. But then the company gave some weaker guidance than what the street was expecting. You couple that in with the revenue miss, which I mentioned was, again, the company's first revenue miss in, nearly 20 years. So, stock getting crushed this morning, down 15%, about $40 down to $230. If we go to the chart here, daily chart, and you pull out, so if we open right here at 229, you're looking at the last time we were here was November 2023. So we're racing more than 6 months of gains here on this weak guidance and weaker report, I guess you could call it. But again, the numbers themselves were fine. It was more just about the guidance being lowered looking forward.
Benioff was on Kramer last night, and he was dropping the AI word left, right, center, trying to talk his stock up. He did talk it up. It was about 227. It went up to 229. He talked it up a little bit on the show. Kept saying, how can't control, I don't know, can't control certain things, but you can control certain things. And basically that it was an excellent quarter for them. He kept saying how the quarter was excellent. The market thinks otherwise, Benioff. Sorry, it's down 15%. And you know what? It's been out of favor. I mean, this stock market, they love you, as AB said off the hop, they love you or they hate you. And there's no in between. You're seeing stocks just get hammered, and then you're seeing stocks get relentlessly bought. And unfortunately for Salesforce, it's kind of fallen into that hate me crowd, where the stocks come off the highs, breaking trend, has no momentum. It's not the sexy AI story, even though there's an AI story here, and I agree with Benioff. CRM is going to be a big player in AI too, but it's not NVIDIA. It's not a major player here. And, they're trying to make themselves an AI company. You see the commercials all the time with Matthew McConaughey, and he's just talking AI Salesforce all the time. So they want to be known as an AI company, but the market really isn't believing it yet, like as a major AI company. So is the dip going to get bought? It's a company. I think eventually this dip gets bought, but it's been a tough play just coming in saying, yep, I'm going to be the first buyer here. It's going to bounce right back. Sometimes it's day 2 or 3 before they start showing some love. Like Brian Shannon says, maybe buy the strength after the dip.
Wow. I mean, I looked at the report and I'm thinking, they
ain't that bad.
I mean, they lowered guidance, but I mean, come on. I mean, they
by
could
a dime.
And they could, I mean, and then the way they do it, they could still come near it. It's not out of the realm of possibilities. But I'll just point out a couple things technically, and the short term chart. I mean, they had that spike low right on the headline number down to 224.30. But you got a sneaky buyer out there at 225. For right now, there's a buyer at 225, and then you got the little Kramer bump. So someone might just be flipping, buying the 25s and selling the 30s, because we have not been able to get over 230. We had all morning, basically, and all the after hours after the pop. So there's a whale at there at 230. If they clear him out, you got a long ways to go on the on the upside to fill the gap. And then I went a little bit longer term, and the weeklies are kind of spotty here. So I'd be, if and when they lose that 225, the Bulls got some heavy lifting to do, because I don't see any weekly levels in this until the 210 area.
And I mean, right now with Salesforce, you mentioned that Benioff is dropping the AI stuff, and I mean, I do think Salesforce will be a beneficiary of AI. The question is just how there are certain companies where the AI is driving earnings and revenue right now, right?
Yes.
Whether you're looking at NVIDIA, whether you're looking at SMCI, like these companies are benefiting right now from NVIDIA versus a year or 2 years or 5 years down the road. And I think CRM falls more in the latter camp, to where
I think so too.
You might not see that reflected in the earnings right this moment, but as it's integrating these AI use cases and whatnot, it might help efficiencies and drive some more revenue down the road. But right now, not so much. I will say, yesterday I went to the bank, because we talked about earlier, I had some cash to deposit, and I noticed on the teller who was helping me, he had my profile pulled up at Bank of America on a Salesforce thing. And I was thinking in my head, because Salesforce, for people that aren't really familiar with it, it helps companies track, leads and opportunities. Most companies are selling something, whether that be a product or a service. But here in my head, I'm thinking what could Bank of America be using on Salesforce? They're just taking my money and I use my credit card and debit card. Where's the opportunity there, really? So I was surprised to see even Bank of America using it, but I do think a lot of big companies use Salesforce. We use it here at Benzinga. So I do like it long term, but again, just not great move here off the earnings.
It probably depends on your time frame. If you're a trader, you're probably waiting. If you're a long-term investor in 5 to 10 years and you bought CRM on the dip today at 228, are you happy 5 to 10 years from now? I think so. I think you're happy a couple years from now. I just don't know if you're happy next week. It's hard. But again, A lot of money in managers, underinvested. Salesforce.com has been a darling, still a darling, part of the Dow even. So, this is a big company here. It's basically the grandfather of cloud. So, and Benioff has been a phenomenal CEO for a very long time. There's good support down here in the 200s. I don't think you're getting all the way down there. Maybe you do. I think, and again, not today. I'm just saying, if it continued to leak, would I be a buyer at 200? Probably. It's a stock I've owned in my long-term portfolio before. I don't have it now, but really give a perspective here. It's been a hell of a run. Look at the QQQs over the course of the last, let's just say 5 years. We're from 250 or 4 years, 250 to 450. You have 60, 70%. Look at Salesforce in that time. It was 200 back, obviously 2020, maybe it's just the bubble, 278. But I mean, when you've been in this range, you've really got nowhere for 4 years here. It's been a 4-year bear market.
I was just going to say that. This may have already just had its day, right?
It's possible.
Yeah.
Now, again, PE is coming down here. So, it's starting to get more and more reasonable. Let's look at the current, if we just go to the current estimates that they just gave us last night for the year, take our trusty calculator. So you take they're saying $9.94. So let's just say $10. Let's just round it for purposes. $10 here. CRM. I mean, it's trading 22 times earnings. It isn't crazy expensive. That's a market multiple. Now, again, if earnings are going to slow, it's an issue. But if AI is going to continue to drive it, it may not be a bad buy here today, folks. It may not be a bad buy. I'm not opposed to buying it here. I just don't know if it's on the top of my shopping list.
Well, that was our first disaster of the day. Let's get to the second, which this one, I mean, look, it's bad news if you're in the stock, but it's probably not as bad for you as it is for someone else. So that's Cathie Wood. So UiPath reported, let's see, let's go over here to our trusty Benzinga Pro. So UiPath reported also yesterday after the close. EPS came in at 13 cents, beat by 1 cent, revenue of 335 million, beat by 2 million there. So also, if you're just looking at the numbers for the previous quarter, not terrible. But then the revenue came in very, very light. So you see right here where my cursor is in Pro, the expectation for Q2 revenue was 342 million. Instead, the company said we're going to do 300 to 305 million. So you're missing by almost 40 million there. For the full year, the market was expecting 1.56 billion. Instead, the company said we're going to do 1.4 to 1.41. So big guidance miss for UiPath. Stock getting absolutely hammered this morning, down 28%, $5.13. This is one of Cathie Wood's biggest holdings.
It's just amazing how consistent she is at finding these loser companies here. And that's what this is. When you got a stock in a downtrend as heavy as it is, you look, and out to the monthlies, this was a $90 stock back when she was loading up in 2021. It's $12. I mean, this is the 5th largest holding, maybe not after today, but was the 5th largest holding in her flagship fund, ARKK. Let's just look at her holdings. It's just for fun. Tesla.
I got it right
bring
here.
them up. Tesla and the ARKK, the flagship fund. Tesla's number one. We know Tesla's been a disaster for a while here, but it was the stock that made her. She was the one-hit wonder. Think of your 80s. Cathie Wood is a one-hit wonder. She hit Tesla and basically nothing else. Well, so but her hit was awesome, and that's what made her, because she threw out this insane price target. When the stock was $100, she said it's going to 2,000 and a hit. And that's what made her name. But she hasn't been able to find really anything ever since. And that's why the ARKK has so massively, and I'm talking massively, underperformed the Qs. Massively. So, selling her NVIDIA back when the thing was like $200, buying UiPath. I mean, just doing everything wrong. Like, think about, Unity was one of her stocks too. I sold my Unity to buy NVIDIA. She sold NVIDIA to buy Unity. That's just telling you how bad she's been.
So this site, it's Cathie's ARK. I don't think it's actually from ARKK or from ARK.
That's right, though. I'm actually on the ARK Fund site on my other computer, so it's right. It looks right.
So this is all of the ETF hold. Okay, no. So this is ARKK. All 35 ARKK holdings. So there should be a way to. Okay, so combined. So here, this will be all of her ETFs combined, not just ARKK. UiPath is still the 5th biggest holding. As you can see here, the cost average for Cathie Wood is about $60 to $65. Well, now the stock's set to open at $13 this morning. And you can just go through here and look. Cost average for Tesla, $85 to 108. It's at 176. Okay, that's great. Coinbase. Coinbase. All right, you're about flat on
She's done
Coinbase.
pretty good. Oh,
Yeah.
she's bought so much. She's about flat. Wow.
She's about flat on Coinbase. Roku average cost is $243 to $254. It's at $56. Square.
Are you sure she's bought more? Those are true average costs.
Yeah, we don't know if this is correct. It isn't.
Yeah, because
yeah. Why you think their cost bases are lower?
I mean, it gotta be.
You know what her problem was, and we'll defend her here for a second. The problem was she got so many inflows at the peak of the market.
Yeah,
and then she put that money to work.
You're right.
So so this is in her defense. I never defend Cathie. I'll defend her to a certain extent.
That's a great point.
She had so many inflows at the very market peak of 2020, March 2021, that she bought the top on a lot of these stocks. It was like money coming in. She's averaging up, and she's an average downer, but she just had so much money thrown at her. She had to put it to work, and she put it to work in all those same companies, and that was the mistake, is she obviously bought all the wrong companies with all that new money. So that's really, Cathie, we're defending you for the first time on this show. That was probably the biggest issue that she had. She was a victim of her own success because everybody wanted to be invested with her after the Tesla run. And she put it on all these other companies, and these companies were not good investments. Roku was just a dumb one. We talked, and we have had Roku correct on this show for a very long time. I called it TiVo Part 2. And I called that at $300, $400 a share. It's $50 now. I'm starting to be proven correct of TiVo Part 2. Maybe Roku's going to figure out maybe there's some value down here somewhere there. TiVo had value eventually too, but I mean, they're one trick pony. This is how you get streaming online. TiVo was how you get to rewind your TV. And then they started incorporating it all into the TVs, and that was history. Roku, same problem. All the smart TVs got, streaming built right into them. Netflix built right into them. You don't need a Roku. That's the issue with Roku. Same with TiVo Part 2.
All right. All-time low, 1040. So you haven't hit that yet, but that's that's a level. I don't know if it's going there. What I take an AB, pull up like the 30-minute chart incorporating the pre-market. There is a battle royale going on just under $13 between like 12.80 and 13, and it thing is not moving. And I thought maybe it was halted, but that's the number. If the bulls, you can't, if you want to shorten the hole here, yeah, well, the pre-market low is I believe a little bit below here. At pre-market lows at 12.42, but battle royale going on at 13. I think if you catch a 13 bid, I wouldn't want to be short at room on the upside. And then I'm sure there'll be buyers going back towards that pre-market low. But if you still think it's a good company, you want to take a poke at it, coming here at 12.85, all-time low, just on, maybe put it under $10 if you're a believer in the company. But eerily quiet, a stock that was over $18 yesterday, falls 30%, $5.45, and it's trading in a 15-cent market, Dennis. So there'll be some fireworks off the open. Let's see if the bulls really want to get this thing over 13.
All right, let's stay in earnings land for a little bit longer. We also had saw some people in the chat talking about it. C3 AI, smaller company, but reported earnings this morning. Yesterday after the close as well. C3 AI non-GAAP EPS, a loss of 11 cents, which beat the estimate by 19 cents. The street was expecting a 30-cent loss. Revenue of $86.6 million. This is a lot smaller of a company than we normally talk about. Beat by 2.2 million. And then let's see, the guidance. Guidance was strong enough to, unlike Salesforce and UiPath, C3 AI's guidance was strong enough that they didn't hammer the stock. They're actually bringing it up this morning about $2.84, up 12%. So let's just pull out the daily here because I'm curious. I mean, this stock is still look, I mean, it's the ticker's literally AI, and
the ticker is what has made this stock.
The ticker
Let's
is
be
AI.
honest here. The ticker made this stock. Was this the AI play to be in? Was this the NVIDIA? Absolutely not. It's a retail loved stock because of the ticker. Genius ticker company, not so much. Now, again, I don't follow the company close enough to even comment on the fundamentals, but if you're buying AI because, oh, this is the cornerstone of AI, they have the cornerstone ticker, but they're not the cornerstone of AI whatsoever. They're going to make some money from AI? Maybe. Still to be proven. Stock, it's done fine. It's held up. I mean, it's, obviously way off the all-time highs, but, it's not like it's one of the meme stocks that have gone, down 98%, although it's not down, it's down quite a bit, $180 down to 23. It's not impressive. So I think the ticker is what they've got. The ticker is what they've got.
All right, it's the way it's trading technically, it's it's going pretty much with the dailies, pre-market high to spotty at like 2740, 2750 area. And then also on the dailies, you had some congestion in that area. That was back in the end of March. So you've leaked a little bit. So if you're looking like for a runner gunner day, we're gonna catch a 27 bid here, take out 2750, and then the funds really on. What I'd be more looking at here, if you're shorting this off the open, man, there was a lot of resistance at 26, or former resistance at 2650. So if they want to hold this thing up, we're only like 30 cents away. They'll hold those tops and take it back up. But pretty obvious numbers here. Got to hold 2650 on the downside, and then on the upside, take out that pre-market high at 2750. And I looked at this afterwards, and just to emphasize the importance of opens and things that go on the stock. I don't know if it's illustrated on AB's chart here, but you know how Apple had that China love? I believe it was on Monday or Tuesday.
Yeah.
And it had that big up open, and it was trading well over 93, and there was a couple tops of 193. And I'm like, okay, is it going to take out that resistance? Boom, it didn't, and ended up having a bad day. So keep an eye on those openings and see where they go in relation to the pre-market, in relation to former daily highs. But we'll see. AI, like you said, it's got the title, but not exactly the stock performance you want to see.
Can we go to Burlington before the number here? We're going to get a number at 8:30, and they're telling me to go wide. Thank you, chat, for always keeping up with the numbers there. And I lose track of time when I start doing the live show, so I appreciate the warnings there in the chat. Burlington's blowing it away here again. I got to give a shout out to our own Ryan Craver, who comes on this show for the last 7 years and just kills it, knocks it out of the park. He has been preaching, Ryan, if you're out there, he's been preaching off-price retailers. I mean, off-price retailers are just killing it. It's the trade down too. You're getting the brand names at discounted prices. If you're struggling, and you're paying your bills, you're going to these kind of stores. TJX, Ross stores, Burlington is coming back here too. I mean, TJX is not far from all-time highs. Ross stores was a little bit off further. I'm just, going through them here right now, but obviously had a good quarter as well. And then he got Burlington, which has kind of been off, a little bit here, but now getting some love. It is off from the highs, but, this quarter was fantastic for Burlington. The guidance is decent here too. Give us the numbers, AB, but shout out Ryan Craver. Good call.
Yeah, Burlington EPS came in at $1.35, beat the $1.04 estimate. Sales came in at $2.36 billion, beat the $2.34 billion estimate. EPS came in about in line with expectations. So they said Q2 adjusted EPS guidance would be 83 cents to 93 cents. That was against a 91 cent target by the street. So again, guidance pretty good, not amazing, but good enough that the market is looking at the positive numbers from the previous quarter, and stock is trading up 15%, about $30. I'd be worried here though, because seasonally weak, for Burlington, look, it's a coat factory, right? And it's the summer. Who's buying coats in the summer?
Yeah, you haven't shopped at a lot of Burlingtons, have you?
Yeah.
I've literally never been inside of Burlington
It's
before.
a full department store. They sell everything in there.
No, I know. They dropped.
That's why they got rid of the Burlington coat factory. It started as a coat factory. It's a good history lesson for Burlington. You used to go in there, it was just all coats. They still have a lot of coats, but they sell like everything now. They've turned themselves into TJX. So they've branded even to Burlington stores because it's TJX. You go in there, you feel like you're in a little bit dumpier Sorry, Burlington. It feels a little bit like not as nice as the TJX, but it's the same dang thing. TJX and Burlington, kind of the same.
And Ross, throw Ross in there in the same category.
Yeah, for sure.
And
Winners in Canada, if you're Canadian, you got Winners. Same thing. I think they're owned by TJX.
And you're going to be going to Gucci. You're going to be going to Lululemon. You're going to be going to Saks.
He goes to fancy places.
Yeah,
no.
I'm
I'm the one that shops at Burlington at TJX. Oh, that shirt's got a little, it doesn't look very clean. It's a little wrinkled. We'll clean that shirt up for $10 and we'll wear that thing. Me, my t-shirts. I love that store. Burlington, we love you. And I remember I used to tell the story. Right. I used to bring my kids, they're the toy section. And Burlington was awesome to go to. I had like the two, when my kids were like 2 or they were like 1 and 3. I'd bring them into Burlington and I always felt bad. I'd go to like a fancier toy store and my kids just destroy the place, right? Burlington's awesome. It's already half destroyed anyway. So the kids are playing with all the toys in there and they don't even care because everything's everywhere.
I thought that was Big Lots. Big Lots.
Well, no, Big Lots is for other things. I told you when Big Lots cleaned themselves up, they were done.
Okay.
Because Big Lots is kind of the same way. You'd buy the aspirin container, the box is crushed, but the aspirin's still good inside and you get it for like half price. It was awesome. They cleaned themselves up, started selling a little bit more expensive products, being fancier. That was the end. They lost all people like me that want the discount. I'm in there to get the deal. There are no deals anymore.
All right. Enough on your shopping habits here.
I should show you the video of them in Winners. I'll show you that to you sometime.
First of all,
it's a good one.
If you're going off the price action and retailers yesterday, then you're thinking of shorting this, you might want to get the hell out of the way because of what happened with Dick's Sporting Goods. So that's one point. You just got to bring that up. If you're a little bit of a contrarian here, you're seeing it up $30 and you're thinking of taking some profits. You do have a little area of interest here. The pre-market high of 231, and then if you bring up the dailies here, you can see that one spike high at 232.34. So I would look at that. Like if they really want to jam this thing, they'll get you, a 233 bid and something like that. And then who knows how high it could go. But just the fact that you have, the pre-market high coinciding with the daily high, it gives you, 2.5 star resistance. Of course, if you have a target in this area, take it. If it starts to reverse, like if you get a run up from 230 to 235, comes back down to that open, and you may want to have some kind of exit plan because this thing is a long ways to go to get to the top of yesterday's range. Dennis is down at 201.10.
That's the thing is like, and you're fading these moves. We're in a little bit. It's a market that's kind of contrarian in a market made up of Momo all over the place. Like this Momo going up, Momo going down, and you add it all up and you got a contrarian market. It's completely messed up, really.
All right, get ready here because we do have
I'm going to go in the back room.
Slew of numbers here.
You guys cover it. I'll be back.
I'm going to get my 1 minute chart up here. I'm not going to get too excited until AB gives me the number, although that's not true. Pre-market low, not much there at 50-50. Coming back on the upside here, mid-range on the session is right where we're at now. That's kind of when we're stalling out. Pre-market high 73.75. I did see a level on the dailies in the S&P. If they do take out that pre-market low, 52.33 is an old double bottom here. They're cooking up some numbers here for us on Wall Street, and initial move is up. So decent numbers.
GDP Q1 came up 1.3%. That's lighter than the expectation of
Light?
1.1. The GDP, I think that was the GDP revision, came in lighter than expected. Jobless claims came in slightly more than expected, 219,000 versus 218,000 estimated. So that was basically in line. Retail inventories, excluding auto, for April, a positive 0.3% versus negative 0.2% prior. So looks like inventories are actually growing, which we know is good news for inflation. Core prices, core PCE prices came in 3.6% versus 3.7% estimated. So that came in light as well. So pretty much light slash in line across the board. You saw here the S&P. Let's go here to like a 1 minute
Yeah,
chart.
it's you know what? It's pretty muted price action. The street wanted some light numbers, right, to get going. The revisions were okay. So you did have some buyers, but it's not like you rip your face off rally yet here. You found sellers. You didn't even make a new high on the session, so that's a little bit concerning. It's just really, we are almost right back to where we were. Actually, we're still up 500, 5 handles when we were trading the numbers. So far, there's been a pop, but you just kind of feel like, people that got caught buying the dip. You could have bought the dip yesterday, and they had a rally, and they or 2 days ago, and they rallied off the open. Yesterday, they did the same thing. Buyers are perking up now a little bit here. We're going for the session high at 73.75. After that, you have to think about the closing price from yesterday, and the closing price in the S&Ps, I believe. Let me go to my daily here. So that's what I'll be looking at on your stocks as well. Down. Let's see if we can get back to the close. The close in the S&Ps is 52.84. That's the lowest close we've had since May 14th. So creeping up there, trying to make a new high in the session. Let's see if we can get green. You got any more information on those numbers?
No, just what we got in pro here right now. The initial numbers. I'm sure we'll get some more commentary from different economists, in Benzinga Pro here as the morning progresses. But yeah, going back to the chart here on the 1 minute, you can see here getting a little bit of a follow through here. Now getting back up to now we're coming back down. Just as I was saying that.
Yeah, we're 2 points off the high of the session. We had a lower open. I'm looking at the the lie detector here, and so far the TLT is holding up. It's still holding up 50 cents. So if that starts to roll over, I mean, what else? Don't you have a bunch of fat heads speaking today? Don't you have PC? When's PCE? Is PCE tomorrow? You have
we have PCE tomorrow. Today, not a whole bunch of Fed speak today. We've actually gotten more the previous days this week. We do have at 12:05, just after noon, New York Fed President John Williams will speak, and then at 5 p.m. Eastern, Dallas Fed President Lordy Logan will speak. So that's after the close. So really, just at noon, you have the one Fed speaker, and then at 10 a.m. you have pending home sales. Not sure how much we care about that, but it's interesting market here. I mean, you because yesterday you had Treasury yields rising, which helped bring stocks lower. And to me, like we talked about this with Greg Weldon yesterday. Like, you're starting to see numbers that indicate the economy's slowing down. So
yes, that's what we want. Well, I guess that's what we want.
Isn't that crazy? Right? That's what we want. We cheer light numbers. Jobless claims slightly 219,000 versus 218,000. I mean, it's a funny market where we're so concerned about interest rates that we want the economy to slow. They need the economy to slow, and IWM especially. We know NVIDIA doesn't care. But I tell you, man, the IWM has been leaking since the TLT started leaking. And TLT, remember, is your lie detector test on all these numbers. It's up 50 cents. Got a little bit of a pop on TLT, bring it up on the charts. That's what you want to look at on these numbers. If you're trading small caps, you're trading stuff, look at the TLT and see if there is movement in the bond market. If they're buying the bonds, means long-term rates going slightly lower, that's going to be good for stocks. So always keep an eye on that TLT. Just look at the intraday here, AB, not where we are overall, because we track this daily. So you can just see the pop right now on this number there if you just scroll down a little bit more. I saw it there for a second. But anyways, the TLT, there it is. There's a little pop. So that's telling you that's IWM is going to move with that, positively correlated with it. At least on these numbers here. So TLT lifting, IWM lifting as
We're
well.
cutting.
TLT starts to fall off. You don't want to be long IWM. Keep an eye on the TLT leads.
We're
On
going to
the
be
numbers,
cutting
it
soon.
leads.
Soon?
I think, but I mean, what is it now? It's about to be June. I think I think here in the next couple months we'll get our announced. We'll get let's go to the CME watch.
You got to see some data coming weeks. So this is one step in the right direction if you're thinking about cuts. It's one step.
No,
in
we've
the right
had multiple,
direction.
but we've had multiple steps in the right direction, and and again, it's weird calling it the right direction. But I mean, look,
yeah, we want the economy to fall
looking
off.
looking at unemployment creeping higher. You're seeing companies announcing that they're slashing prices to drive demand. You got McDonald's coming in with a $5.
Wait. Take your interest rate going down, hat off. We're not done with inflation yet. We got PC coming out tomorrow. And
is the PC tomorrow?
Yeah.
PC's tomorrow. You have jobs data, or excuse me. In fact, I didn't look up blue. We have CPI and PPI next week. So their number one mandate right now is still reining in inflation and making sure that's under control. And all the data and everything that they've said so far over the last few weeks has been, hey, a little hotter than expected here. So stable for longer. I don't know how many times I have to say that to drive it in people's heads. I don't think their interest rates are going up before the election because everyone will say, oh, he's doing it to win the election. I don't even see him going down in 24. And let's see what that inflation data gives us next week.
Yeah, again, to me, like it would be very worrisome if we're seeing all these other economic data points and then inflation doesn't fall at all. Like if you're seeing unemployment go higher, if you're seeing, inventories rise and you're seeing all this and prices still don't could come down somehow, then we're in trouble. And
it doesn't feel like they're coming down though. I'll be honest. It doesn't feel like it. It feels like stuff is still expensive. Like you got oil, starting to tick higher here again. We know the commodity trades, some of them have been really moving higher here too. It doesn't feel like inflation is gone. It doesn't feel like that. I know the data, it's slowed down, but it still doesn't feel like it's gone. So, I mean, yeah, McDonald's is trying a $5 value menu. And, this is a step in the right direction. American Airlines yesterday showing soft demand.
Ooh,
so,
I mean,
that's how, it's going to happen here. But it doesn't feel like, to Joel's point, it doesn't feel like we're there yet. It doesn't feel like we've beaten inflation and it's time to start lowering rates. It still feels like there's a battle here still. And there's still a lot of, companies raising prices. You're seeing it. There's like a protest against Loblaws in Canada because the prices go up there every single day. So that's a major grocery store. So I mean, it's pockets of inflation. There's some stuff that's slowed a bit, and you're not seeing inflation there, but I mean, there's still pockets of it everywhere.
So this part's a little bit worrisome to me. So someone in the chat was saying that it's all fake numbers, Aaron. So going, I'm saying going, even if you're looking at data that's not the CPI. So I do like, what the group over at Trueflation does. And a lot of people now are being like, oh, Trueflation is so, not bullish isn't the right word, but they're saying inflation is a lot lower than it really is. Trueflation, for the record, was showing 10%, 40-year highs in inflation before the government was reporting that. So they were, they had those numbers quicker than the government was reporting on the upside. And then on the downside, they started saying inflation was lower than it was. And even Trueflation right now, it's showing 2.64%. The government reported rate is 3.4%, so it's showing lower than what the government's saying. But even Trueflation is showing that inflation has picked back up in the last month or so, starting at the beginning of May. So that is worrisome to me because, again, while we're getting these lighter economic data in one sense, if inflation truly has picked up more, more in the last month, while unemployment has creeped higher, while, American Airlines is citing a weak consumer, then there might be something, more problematic going on. But again, like, I just don't see how eventually these prices don't come down, or not even prices come down. We know prices don't come down. I don't see how the inflation number doesn't come down because prices stay steady over the next few months. If, you had Target, Walgreens, someone else announcing they were slashing prices. And like, companies don't just do that out of the goodness of their heart. Companies do that when they're dealing with weaker demand. McDonald's isn't doing the $5 meal.
No.
They're
And
doing
Wendy's
it
following suit.
yeah.
I mean, we've talked about the McDonald's on this show a lot, and the prices have gone astronomical, when you're looking like it's gone up so much. I was tweeting out, showing up the quarter pounder up 80% or something over 2.5 years. So, I mean, they know that it's gotten to a point where, they were even saying that at survey, 2 days ago, that fast food, that's something like 70% of people see it as a luxury now. I mean, they can't have that. Fast food's got to be, reasonable. People are just going through. They're losing business there, and they're doing a $5 meal because business is slowing there a little bit. That's why, I've talked McDonald's before, and you know what I think of McDonald's stock, and I've been absolutely correct on this too. I should have just taken all my money and short McDonald's at $2.75 when we started trashing it. It's $2.49 now. The damn thing's going straight down. This is a big move for McDonald's, but they got problems. So to AB's point, there is some softening demand, and that will be when we start seeing the Fed talk and actually cut rates, is when this demand continues to soften. Today, real GDP 1.3%, 1. It's a nothing burger really today. I would say the number, it's something, it's maybe moved slightly in the right direction, but stuff like American Airlines yesterday,
that was bad.
That'll get the Fed's attention. They're going to say they're looking at data, but there's people looking, at what's happening there too, and looking at the economy and looking at specific companies and what they're saying. I mean, that gets your attention.
And you might say, oh, it's Aaron, it's just Target, McDonald's, and Walgreens. A few companies cutting prices, but if you don't think those three companies are, you can take some, you can extrapolate some, like trends about the overall economy. Look, if people are spending less money at Target and McDonald's and Walgreens, chances are some other companies are seeing that demand, starting to slow down as well. So again, just something to watch. And the thing that, it should note is if these companies start bringing prices down a little bit now, that doesn't mean we're going to see it reflected in next month's CPI. It doesn't even necessarily mean we're going to see it in the month after that CPI. It takes months for these changes to kind of reverberate throughout how the government is grabbing the data. So again, I'm not calling for a huge drop in inflation like next month. I just think right now, like you're starting to see that kind of landscape with a weaker consumer and companies starting to try to fight to keep those.
The airport indicator, it was light. It was light.
Was it light?
Yeah, very light yesterday. We were a little bit behind schedule, man, but it was just like we zipped through everything, TSA. So, I mean, it was a Wednesday, right, at the end of the month, but just the eyeball indicator, I saw that AAL news. So, man, my flight, man, wheels up, wheels down, boom, they didn't mess around. It was.
I'm telling you, I'm kind of on the side of both of you guys here. Where do you think, Joel, that after all this talk, the soft landing and all this, do you think we could actually end up going into a recession?
Anything can happen. I mean, anything can happen in this market. I mean,
and that would be good for the market, apparently. A recession would be good for the market, apparently.
Yeah. Yep. I mean,
I don't necessarily think and I guess like recession, you can be different.
2 negative quarters of GDP. Canada's officially been in one. I mean, it'd be very crazy. All this talk and the markets are at all-time highs, and the markets drive to all-time highs again because we go into a recession. Wouldn't that be ironic in itself?
Well, I mean, the Fed does have the ability. It's got like tools in its toolbox essentially here to kind of stimulate the economy with rate cuts. If we get more data showing that it's slowing down, so I don't think. And right now the job market, even though unemployment has creeped higher, is still relatively strong. There are more job listings right now than I think people searching for jobs. So it's like people can get out there and work. It's not, when it starts getting worrisome is when people are looking for jobs and can't find any. And I don't think we're in that zone yet. And then as soon as the Fed does cut rates a little bit, then companies start hiring more. So I wouldn't be worried about like a big recession, but like you said, Dennis, it could be a slight, just 2 negative quarters of GDP growth, and then we'll go from there. But I think this is like healthy slowdown of the economy. for at least so far from what we're seeing in data. I'm you know what? I'm gonna take a page. I'm gonna take a page from Powell's book and say I'm gonna be data dependent here.
Okay, we got to ask you the question. ScarJo, I just posted it. Were you in a Boeing, Joel? Were you in a Boeing? Did you look?
I didn't look.
He didn't look. He's in a Boeing.
No.
He didn't look. He said next time he flies, he was going to look. He didn't look. He's too scared to look. He'd have been nervous the whole time. He's like, man, I am in a Boeing. He'd been so scared.
No, well, I know I have the comfort level that Delta is Airbus, so I didn't look.
You just were confident that it was Airbus.
Yeah, and it was
Airbus.
Yeah.
We should look up your flight. What was your flight number? We'll look it up. It's like, you're in a Boeing.
No, I'm not gonna look it up. I'm not gonna look it up.
He ain't looking it up.
All right, let's get to some more earnings.
Yeah, I want to cover from yesterday. I want to cover Bank of Montreal because this is one of the biggest moves I have ever seen in one of the largest Canadian banks. My wife worked there for years. I have legacy shares, so I wasn't overly impressed with the move there either. That I don't remember seeing, maybe during the financial crisis, maybe during the COVID crisis, we had a move like this, but I don't remember seeing an almost 10% down move in a Canadian bank in a long time. Like, Canadian banks are very conservative with their lending. We know even from the mortgage perspectives, they only do 5-year fixed. Those are all coming up. I mean, the earnings weren't great. They missed, but holy, I've never seen them get punished that severely. So Bank of Montreal will give the earnings from yesterday, and it's just such a drop. That's why I just wanted to cover it. And we had multiple Canadian banks report here this morning, and they're actually all doing okay. But we go to the Bank of Montreal numbers here from yesterday. I'm just trying to grab it here, actually. And
yeah, I got it. I got you, Dennis.
You got it? Yeah, bring them up.
So yesterday, lots of file-ins there.
That's
yesterday, Bank of Montreal EPS came in at $2.59, missed the $2.77 estimate. Sales came in at $7.98 billion. I assume we're talking Canadian dollars here.
Yeah, Canadian.
$7.98 billion missed the $8 billion estimate there. Raises dividend at 2.6%. Had to be some weak guidance or something. Let's see.
They must have said something. I did not, because there's so much stuff, to talk about. It's funny, I own Bank of Montreal in the long-term portfolio, and I didn't even notice till like midday. I was like, oh my gosh, they absolutely hammered that, because they didn't hammer it off the open, but then the selling just continued throughout the day, and they really did. It was a miss and a miss. But it just goes to show you, when you miss earnings in this market, there is no forgiveness. Even if you're a bank with a history of, very good earnings, obviously, and Bank of Montreal has that. And I mean, they actually increased their quarterly dividend here too, to 155 from 151, which you're talking about a 3.6. You're talking that thing like a 6 or 7% yielder now. I mean, one thing I know about the Canadian banks is the lending policies are so conservative that these aren't like, your regional U.S. banks and going out of business. These things are ultra conservative with their lending. And I got to think like there's a buying opportunity eventually, just starting to get to, 10 times earnings, 277, actually less than that. I mean, you're talking about a company trading like 8 or 9 times earnings. All kinds of coverage for that dividend too. I mean, this is a pure value play at this point in time. But I don't want to be a hero and say this is the bottom. I'm already in it actually too. I've been in it for years. I think my average cost based on Bank of Montreal is like $12 or something. But and again, that was a little bit employee share, because my wife would get them at like 50. You get you buy the shares and then they give you 50% more. So you're always buying them at discounted shares. So we just have those from when she worked there for all those years. But I'm like, wow. I mean, that is just
when's that? Can you think of the last time that move that made? I mean, that's like
I don't know.
A regional,
probably the regional.
I think during COVID.
Probably the regional banking crisis. I mean, if you go back, let's see.
It didn't get hit like that in the regional banks, because the reason it is that this is not a regional bank. Like, it's not like this is your Bank of America in Canada. Like, these are huge banks. These aren't small. You have the big 6. So people who don't know the banking industry in Canada, there's 6 big banks, and that's pretty much it. There's a lot of little, trust credit unions. There's some other little stuff, but there's mainly 6 big banks, and they all kind of move together to a certain extent. And they all lend conservatively. They don't do anything out more than a 5-year mortgage. I mean, they're extending them now at some of these rates because, some people are underwater, but it's 5-year fix is the max you can get on the fixed rate. So I mean, they're ultra conservative. That's why when I see a move like this, I automatically think buying opportunity. But I think you got to wait until you start seeing some strength, because this market just punishes for so long after you miss that maybe there's some continued weakness. But wow, this stock's got dirt cheap.
You kind of feel like there's something that in the report, just something like you're not seeing here, something that
in the call maybe.
Or something along those lines.
I think they just miss earnings and they just, what's wrong with the CRM report, Joel? I mean, it wasn't bad.
I don't know.
16%.
I know.
He said everything right. This market just loves you. That goes right back to the title of the show. They love you or they hate you. There is no. We love you or we hate you. The algos come in and buy you up 15 to 20%, or they sell you down 15 to 20%. It's just the way it is. So every day you come in, we've talked about this for years. Seems like every day you come in, there's something up 20%, something down 20%. And sometimes they just continue to go. I mean, if you're on the wrong side of the market, it's hard to turn around. Just ask those China stocks. I'm trying. You think they're going to turn around. You think they're going to turn around. And then boom, 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 they're right back down. Just on like a week. Give it all back. I mean, it's tough to turn sentiment on individual stocks.
This has just kind of been in a really nice trading range going back for quite some time. I'll just do a quick technical on BMO and then we can move on. But man, this had just been, 90, 100, 90, 100, just being kind of lazy. And now you're losing this. Doesn't look, we'll see. We'll use that as resistance now. But man, it really marched up through that 80 to 90 handle and then, continued. So until this thing gets back above 90, of course, on a day like this, you make a higher low or you make a little, undercut and rally, put a couple more lows in the same area. Technically, it could work. And just on the monthly chart, though, it just doesn't look sexy either on the monthly. So we'll see. It hasn't really affected the other Canadian banks. I mean, it's when did you said something about the mortgages and things rolling over, which could be a positive catalyst?
Yeah, I think so. I don't think people are seeing the forest through the trees here. So I have on one of my rental properties there, I have a mortgage with Bank of Nova Scotia. I've been sitting there. I was a 4-year fix I did with it. And I've been sitting there at 1.64%, just like laughing. And I've actually got, the money to pay it off, but the luxury to pay it off. But I'm like, why would I pay any of that off? I actually called my banker and said, slow that thing down as much as you can. Amortize it out as far as you possibly can. So we were on like a 20-year AM. He extended out to a 25. So I'm like, I want the 1.64% for as long as I can. So I don't want to be paying off more principal right now. I want to keep borrowing. So with that same bank, I've been buying GICs for a similar amount of money and getting 5.7%. So I'm literally borrowing from Nova Scotia at 1.64 and lending to them at 5.7. I'm making 4 points. It's awesome. That game ends for me, I think, December the 12th. And that's when my mortgage comes up. And then I'm going to simply redeem my GICs and pay off the mortgage. Now, again, people don't have the luxury. So, I'm talking around, and been talking about people. And this is why Canada's starting to slow down as these fixed mortgages come up. And everybody's on a 5-year max and no 30-year. Doesn't exist. 5-year max fixed. So we're 2 years into this. So as they cycle through, all of a sudden, Bank of Nova Scotia isn't going to be losing 4 points to Dennis Dick anymore. They're actually, would potentially be making money now because they can renew me up at 6%. So there is going to be a time where these higher rates are actually going to benefit the Canadian banks. That's the truth. They're going to actually be a benefit. So because now all of a sudden, they've been making money through this crap. It's going to get better for them as people continue to renew. Some of these higher rates are actually going to help some of these banks.
Is that Bank of Montreal where you're doing that?
That's Bank of Nova Scotia.
Bank of Nova
Scotia. My wife worked Bank of Montreal all those years, and she quit, and then I got most of my stuff Bank of Nova Scotia. I was with Bank of Nova Scotia forever, and then I married my wife, and she worked at Bank of Montreal. I was like, I had to move everything to Bank of Montreal because you can't be with another bank. And then she quit. I was like, move stuff back to Bank of Nova
Scotia. You took your loonies back.
I did my loonies back. Loonies and toonies, AB.
Paul makes an interesting point here. Triple D's like Apple borrow at 2% and collect 5% on their cash. I mean, that's another thing. When you think about these companies like Apple and Apple's holding up, right? Not great. They got that cash hoard and they're just getting paid. They're getting paid. So That's another thing for the tech company. I can remember when you were going on that buying spree of properties, you didn't really want to buy properties. You just wanted to get that low interest rate. You loved it. I remember that. You bought
Well,
two.
my banker was saying to me, like, when I was borrowing, because I didn't need to borrow for it, I'm like, well, why don't I just pay it? He's like, Dennis, you can't make 1.64% on your money. He's like, you should be borrowing as much as you can. This is the banker's job, right? To send you stuff. He's like, I'll give you, this, and he would give me way more. He's like, why are you not just borrowing? You're doing so well. Borrow and invest it, or borrow and do something. 1.64% is no brainer. 5-6%, it gets a little bit tougher. So, I still use margin. Obviously, my brokerage account, I'm still borrowing in different ways, but I never like owning, but at 1.64%, I mean, they were just handing out money for free. Negative interest rates. Let's talk negative interest rates. Is that the stupidest thing that the world ever did? Do negative interest rates exist anywhere now? That's got to be the dumbest thing ever created. I'm going to lend you my money and you're going to give me less back. That's the dumbest thing ever. That's the way the world was going. Negative interest rates. It's a privilege for us to hold your money. You got to pay us to hold your money. Crazy, the world, man.
So a lot of things of advice that my dad given me before he passed away, but borrow when you can, not when you need to. And that's the truth, Get the money when you can. But all right, 8:56 here.
Can I borrow $100, Joel?
Talk Dell.
Yeah.
They want to talk Dell.
Let's go over to Dell.
It's unfathomable now.
Oh my God.
The move is just in full melt up mode. This is the biggest earnings run I think I've ever seen. Like in a stock like this, it's up. It was, and obviously NVIDIA earnings help, but it was $150 4 days ago. It's $180. It just ran up 30 points in 4 days. They report tonight. They have got to blow it absolutely away. The bar here is as high as it possibly can be. This might be the highest bar for a stock. It might be higher than the NVIDIA bar. This move in Dell, because Dell doesn't do this. NVIDIA, is wild. Dell doesn't move like this. Dell's went full AI mode, and they're thinking every single person's got to go buy an AI Dell computer out there tomorrow or right now. I mean, this move is absolutely crazy. I like the stock. It gapped up. I talked about this. It was the worst thing. I got to listen to myself more because I said on the show when it was 110, this was back in March. I was like, I like this stock. I never bought it. Went down to 105, went down 5 points after I said that. It's $181 now. Like, why did I not buy that? I did not. I did not buy Dell, and I should have. The valuation was reasonable. Valuation's starting to even become stretched on this thing now. So I don't know what to say. Maybe they are going to blow it away. Maybe it's the beat's going to go on. We know the strong get stronger, the weak get weaker in this market. But wow, the bar is super high here, folks.
I mean, based on the price, so what it reminds me of, and I'll bring it back to sports and sports gambling real quick, is when you have like a line, like say a company or a team is like even money, like, the odds are pretty even. And then all of a sudden, like in the hours or day leading up to the game, the Super Bowl or something, the line starts moving to where one team is favorited, like, minus 200. And you're like, it looks like the people with money might know something we don't. And typically that the team that the odds start going down for typically wins. So if I had to guess based on the price action, I think Dell's earnings will be strong. But I think a lot of this move will have already been baked in. So I wouldn't be surprised to see Dell report a great quarter and the stock actually not move that much higher because it's already.
You have the straddle on that, Dennis? I'd just be curious.
Yeah, let's go grab it. Okay, because we're going into options. Options markets closed, so we grab the closing prices from yesterday here. Options chain for Dell. May 30th, so we get this week's expiration. We're going to grab the closest ones with the 180. Oh my gosh. Oh, guess. What do you think it is?
Wow, the way you said
Don't read the chat.
I'm not going to 30?
No, it's not 30 your way. So I maybe put it too much, but Dell's expected move
20
is it's over 20. It's $22.25. It's $22 the expected move. This is Dell. Who's paying $11 for calls on that?
I think the only way it moves.
This seems like way. $22 for Dell? I mean, this is, and if people say, oh, there's other moves happening like this. I mean, this is out of the norm for Dell. For years, bring up the monthly chart on Dell. For years, Dell moves a buck, here or there, down a buck, up a buck. For years, goes nowhere. And then, they decide it's an AI play basically at the beginning of 2024. They decide it's an AI play. The stock is $77. And they backed $100 onto it. I don't know if it's the pure AI play that everybody thinks it is, but they think this stock is NVIDIA. Again, the valuation was ridiculously low for too long. So maybe that's the case, but wow, what a move. 22.
Well, also, what about the move? If you think about it, the way, it's taken off, just think about
it's a PC maker.
What the move's been in the straddle. Like, can imagine that thing's probably just been moving out, exponentially. So if you were like, I don't know what's going to be earnings, and you didn't do your pre-earnings, play with the stock, I'll buy, 130 straddle. You probably could have a couple weeks ago. I mean, you probably could have bought that for like $4 or $5 based on the volatility.
Oh yeah.
And now look at it. Okay, so $11 up, keep an eye on that for the expected move. I mean, the way these things have been rocket ship, and I just, I don't want to stand in front of it yet. It's still just, I'm a big Dell right here. I'm a true Deller, but me buying one every 2-3 years, I don't think it's what's moving the needle. It's AI. Was it Dell with the golf ball? Michael Dell with the golf ball?
So again, the catalyst for the most recent move, folks, was Michael Dell on the weekend tweeted out a picture of a golf ball, and it said Dell, and it was a video, and then he rolled it over and said NVIDIA on the back. And they can't stop buying it. I mean, he totally just pumped his stock. Like, what have we moved up here? This was the weekend, so 2 days. He just pumped his stock like $25 in 2 days on that golf ball. The golf ball trade. Should have known seasonality golf balls are hot.
Seasonality, baby. All right, it is 9:02 here on the East Coast. Joel, who do we got coming on the show with us tomorrow on a Friday?
We're going to get a look from Jonathan Corpina from MEP Partners. He will not be on the floor, though we did work it out. So the next time he's going to be on the floor, but talk to him about the upcoming data, coming market, what the big boys are doing here at a pretty good point in the market. I mean, folks, we pulled off back to high again. The only thing I'd caution about here is we did take it out last week's low, and I don't know how many times, during this great run, we've taken out last week's low. So keep an eye. That's right where the high of the day is. So keep an eye on that. If the bulls want to catch a bid, we got the PCE tomorrow. So looking forward to it. Another great show, guys.
All right. Well, thank you to everyone who tuned in. Please smash the like if you haven't already. We will have live trading starting up right now. Dennis, again, congrats on the Game 4 win last night, which, like you said, long ways to go. But hey, doesn't 2-2 feel a lot better than 1-3?
If you were down 3-1, they'd be done because they're not going in and taking 2 in Dallas. Now it's 2-2. You just got to take 1 in Dallas and then win at home. Win your game 6 and take one of the other games. And we moved to the Stanley Cup final for the first time since 2006. It'd be amazing. And McDavid, feels like it's McDavid's year, but I'm still scared of the goalie. Skinner scares me.
Well, all right, guys. Again, thanks for everyone tuning in. We've got live trading starting up right now. We will see you guys tomorrow morning. Till then, stay green. Peace and love, y'all.